Hey,
Hey Sierra, how's it going?
good. How are you?
Pretty good.
Oh, that was plugged up. Okay.
All right, I'm ready whenever you are. So if you whenever you have your questions or whatever, we can get started. But I'll pretty much just wait on you to see if you have anything specific you want to cover.
Um, so my thing is I've been trying to trade on the 1 hour time frame and it seems like I don't know. Maybe I just don't have the patience for it, but it seems like it takes trades forever to play out. And I've been trying to make sure like I look at the higher time frames um, and line all the zones up. For one, when I try to do the top down zone thing, I can't get the blocks to stay saved. So like when I go from time to time frame.
Oh, it'll disappear when you go off the page, right?
Hmm.
Yeah. So basically, when that happens, whenever you draw your zones, make sure to click on this button right here. I don't know if you ever noticed this right here. This will save your chart. So if you ever go from a chart to another chart, or if you refresh your page, it'll automatically save so that it doesn't happen, because it's happened to me before too. Where I'm working on something and I'll move to another chart and then I'll come back and then I'm like, where do the zones go?
Okay, so it
Yeah,
looks like there's already a check mark in there on the unnamed. And then when I click it, it says auto save.
yeah. So you have this on right here, right? The auto save button.
Hold on, let me see. Yeah.
Okay, cool. Yeah, just make sure every time you work on a chart, just click on that button to make sure it saves. Because for some reason, sometimes it doesn't auto save. So I always got to make sure that I click on that just to make sure. So when you're doing the zones, what time frame do you generally draw your zones on? Or do you draw them on the 1 hour? Or do you go on the higher one?
I go to the 4 hour and draw.
Okay, cool. Yeah, because that's probably the best option for, just to draw the zones. Because I feel like the 4 hour has a better and bigger picture where it does connect with the 1 hour. So are you applying the pivot strategy, or is there like one specific strategy that you're applying?
Um, I can't get the pivot strategy down. So I've been trying to apply the zone strategy and then um yeah, basically the zone strategy. Make sure the I don't know the lines, the green or the red lines match the trend meter before I enter a trade, and making sure that it's like 15 pips away from the next zone. And then it seems like I can't find good trades. Like, well, of course, because this is your system, you have it down packed. But like whenever you do like the Asia trades, it's like instantly will automatically go to TP or whatever. We all know that it at least hit TP1, and it's like I feel like I just can't even find good trades.
Gotcha. Yeah. When you go on so what pair do you normally look at? I can look for trades with you so we can see, maybe you missed something that you could have caught.
So I've been using the screener um on what is this, Trading View, and then I'll go through whatever is like a high sell or a high buy, and I'll look through those, and if I don't see anything, then I'll just wait. But I don't have like one pair that I've found that that I like.
Gotcha. Okay. Yeah. You should probably stay away from that, because I used to do that before too. The problem with the screener is that when you look for something that's like a strong sell or strong buy, it's probably too late at that point, because when all of those, I know you're looking at this thing right here, the Forex screener, like whenever you see these strong sells and stuff, it's
Mm.
probably way too late, because by the time you take a look at that, it was probably trending for like hours, if not days. And then by the time it got to strong sell, because it'll probably be at sell for like a long time. And then once they all get to strong sell, at that point, it's probably like oversold or overbought when it says strong sell, strong buy. So I would just go down the watch list and just look at every single pair versus trying to catch whatever's strong sell or strong buy. Because like I mentioned, this could be like, let me see if I can find, let me just go to the overall pairs. Let's see. Turn on these filters. Yeah, because I think you have it set to maybe like the major pairs. So basically, like this could be sell for like a long time for like UJ. And then by the time it gets to strong sell, it's probably been a sell for like days on end, maybe weeks before it reaches strong sell. So the thing is, when it gets to strong sell, it's probably been pushing in that direction for way too long. Like maybe one of these right here, like UCAD. We're still in a sell with this position, but the thing is, we probably entered this position way before it started to become a strong sell. Because the thing is, like these ratings, I don't know if you go by moving average or the oscillator or just the overall ratings. Basically, when it reaches strong sell, that means that it's been pushing down for a long time. And generally, you know how the Forex market works. If it's moving in one direction for a very long time, it's going to have to bounce back eventually because the Forex market's a ranging market. It's not like stocks where it'll be a strong sell and then it'll say strong sell for like forever. With Forex, just by looking at the chart, you can tell that, see, by the time you enter a strong buy, price is probably way up here already. So when you get that strong buy, it starts to go the opposite direction. And then when you get the strong sell right here, so you can see it was pushing down for maybe a couple days here. And then once it got to strong sell, it just pushed right back up. So that's probably why you keep getting the, like entries that are not, or you're not finding any good entries, because the problem is when you're looking at that specific pair, it's probably way too late at that point. So you should probably just go down the watch list. Like, I don't know if you have my watch list, but there are not that many pairs to look at. There's probably like 24 pairs here. So you can really just, let me go back to the normal chart. You can easily just, once you have everything already marked up, you can just go down each pair one by one and just see if there's any entries there versus having to just wait for something to show a strong sell, because there's a ton of entries here where you could have taken, one of these here. But I think it's better for you to just focus on a specific, list of pairs for you to look at. And the pairs from my watch list, these are the ones that usually have a really high win rate and the spreads aren't that wide. Because sometimes if you look on the Forex screener, they have a ton of other pairs here that you probably don't normally trade, like NZD Euro right here. And then this is something that isn't really traded very often. So the spread will be pretty crazy, like 8 pips. They have a lot of random pairs here that aren't really highly traded, like this Japanese Swiss franc. I don't even think you could even trade these pairs because
some of them you can't.
yeah, because a lot of these pairs are based off a different currency. So like generally, if you're trading the JPY CHF, you're like trading the Japanese yen for the Swiss franc. But we're located in the US, so we can't trade the JPY. That's why if you look here, none of the first pairs are JPY because we can only trade certain pairs as the base currency. So I would probably just recommend that you stick to the list, because I've already handpicked all of these Forex pairs to have like the best spreads, and they usually have decent volatility, so you can get in and out of trades quickly. Because the last thing you want to do is enter a pair that doesn't really move that much, and then you'll probably be holding that for like days on end, if not weeks, and then you're gonna be like, crap, I should have never entered this trade.
So where do I find the watch list again?
So if you go on the website, let's see if I can pull it up here. Let's go. Yeah, so if you go on the K² website, let me see if I can pull it up right here.
I got it.
Yeah, so if you go on the K² website right here where it says K² watch list, you click on that. Okay, you got it. Perfect. Yeah, you can just export this to the to your trading view, and then you'll have.
How do you do that?
To export it, you just click on this drop down button right here.
Wait.
And then you click that.
Okay, which drop down button?
Yeah, so right here where it says your watch list, click on that drop down, and then click export list. Oh, sorry, I mean export. Hit import.
Okay.
So once you hit import, you can just load up that file, and then it'll have your watch list here as well. Pretty much the same thing that I'm looking at.
Okay.
Yeah, so basically, if you're applying that strategy, the zone strategy, I mean, it's pretty simple, but it's kind of, I mean, I guess, yeah, like you mentioned earlier, it's my system, so I know this like the back of my hand, but it's pretty simple. Like, so I'll go over the requirements again, and we'll just go over some entries here, just so that you can see what I mean by it. Let me just replay to this point, because this would be an entry right here. So all these zones are already drawn on the 4 hour, so we don't have to worry about the zones because you've seen me draw those before. But looking at the K² SR, and this strategy, although it does work on the 1 hour, I recommend you probably use it on the 4 hour, because the thing is, the zones are gonna be a lot stronger on the 4 hour. I mean, you're gonna have to be more patient. Like you mentioned earlier, patience might be the issue where you don't really want to wait for the trade. But this strategy requires a ton of patience. So maybe this might not be the strategy for you, but if you can be a little more patient, I would recommend to trade it on the 4 hour. But I'll show you on here too, because it does work on the 1 hour as well. So first, you just want to confirm a break and close past K2SR level, and then confirm direction of momentum using the K2 momentum indicator. And then lastly, you can enter on the open of the following candle, and then set stop loss at previous swing. All right, cool. So like right here, for this entry, we would confirm that. So there could be two different catalysts. It could either be when price confirms and breaks and closes past the K2SR level, or it can be a K2 signal like this right here, because right here you can see that price broke the zone right here and it closed past it, but there was no momentum going that direction, so we wouldn't have taken this trade. But once we have this right here, this would confirm these two requirements. So there's no order for it. It just means that both of these have to line up. So basically, right here, when price came down right here, this was the first requirement, and then momentum came down right here. So these qualify for an entry. So once you have these right here, you can just measure it to make sure that there's enough space here for you to take this trade. It's about 25 pips, so it's perfectly fine. You can enter your short position right here, and then your stop loss would be somewhere around there, 30 pips. And then you can adjust your TP to like TP1 somewhere maybe around here, and then maybe your TP2 is like halfway around there, and then obviously your full TP would be down here. You don't have to do this, but I always recommend that you at least line it up so that you know when to move your stop loss, because the problem with a lot of people is they'll reach like nearly full TP. They'll get to like right at full TP, and then there's a zone here. So when it gets to a zone, it's probably going to reject off it, and people never like move their stop loss. And when that happens, it could go way up here. But if you had your stop loss move to TP1 or TP2, you could have at least locked in some profit there. So once you have this set up, we can let it run, and you can see right there, it went straight to full TP. And this was on the 19th. So this entry right here happened like 3 days ago. So I guess on Monday. So I'm not sure if you caught this trade or.
No.
Yeah, you probably didn't. But yeah, so this would be, that would be one entry right there. And then again, right here, there's another entry as well. So same thing, same requirements. This is on the 1 hour time frame. Confirm a break and close past the K2SR level. This would be a break and close past it. And then confirm the direction of momentum using the K2 momentum indicator. Right here, we have a sell signal. So both of the requirements were met. And then you can do the same exact thing. Enter on the open of the falling candle, which would be right here. Seems like the swing would probably be somewhere around here, because it kind of came down and it swung up a little bit. So probably be around 30 pips as well. The problem with the swing is that a lot of people, it's very subjective. So not everyone sees the same thing. So if you don't want to like actually calculate, eyeball it, you can just use the short tool and then have it do it for you. which was like close enough. Like it set it at 32 pips, and I just
Mhm.
adjusted it to 30 pips. And then same thing here, like that we did last time. So you can see that it comes down to this next level over here. So you might want to put your stop loss, maybe right there. I mean your TP1 right there, and then maybe your TP2 somewhere around here, just so you can
Mhm.
adjust your stop loss as it goes. And then if we let this run, you can see that it hits TP again right there. So you can see it's a super simple strategy. There was an entry right here on the 19th. Yes, this entry again on that same day on the 19th. So you would have had two full TPs for 60 pips total around there.
Wow.
It's real simple. I mean, I feel like you might be overcomplicating it, and that's normal because a lot of people do it. It was like you said earlier, like this is my strategy, so I know the strategy. Like I can easily apply it, and then for you, you're like, how did I miss that trade? But it's not the same for everyone. It's something that you really learn with practice, and then you just the more you practice it, and the more you identify these entries, the easier it'll be for you to spot it real time, especially if you're looking at it live. I know it's a lot harder because you kind of second guess yourself and you're not really sure if it's like an entry or not. uh,
Yeah.
but yeah, so right here there's no entry. Right here would be another entry, and we'll see if it works again here. So same thing. We confirmed a break and close past K2SR level. Same situation with the momentum. We still have a sell signal up here, so the momentum is still coming down. Let's see if there's a lower level here. So the problem with this over here is that we don't have a lower level. So we kind of have to figure that out before we enter this trade, because we want to make sure that there's no zone that's getting too close to it. So let's check that out real quick. Let me see. Let's run the K2SR. I'm gonna go back on the 4-hour just to see if there's any zones in this area. So it looks like the next zone is like way down here. Let me see on the 8-hour. Yeah, it doesn't look like there's any zones right here. So it looks fine. I think this might be the, yeah, so that's the daily zone down there. So if there's no zone, then we can just, give it a chance. But me generally, I probably wouldn't want to enter a trade like this because the zone is so far down that it would probably signify that, at some point it's probably going to have to retrace, because this drop
Mhm.
down here is, how many pips is that? It's a long drop.
Right.
Yeah, it's like 800 pips almost. So like in this situation right here, I might have taken this trade, but I might have, I would have for sure moved my stop loss and profit as it moves down. So we can let this run and see if it actually plays out. So see, right there, that was what I meant, because it's pushed down far enough. I mean, it's pushed down too far, and there's no zone that's down here yet. So this would have gone stopped out. However, if you took the two previous trades over here, like this one and this one right here, you'd still be in profit about 60, 70 pips. So this loss right here, you still would have ended up in profit, if you ended up taking these trades. But I think what happened here was there was news yesterday, wasn't there? Or something was going on yesterday, because I remember we
Yeah.
stopped trading. So I think we probably wouldn't even taken this entry because, or I think we did. Let me see. We did take the odd CHF that hit stop loss. And I think that was when the market was just acting weird. Yeah, so it looks like that was a trade that I did call. I actually called this trade, but on the 4-hour time frame. Uh,
Mhm.
but I know yesterday the market was just moving weird. So this is something that we couldn't really predict was going to happen. I think Trump was
Exactly.
sending out some tweets because they were talking about the new stimulus plan. And the thing with the stimulus is that it highly affects the CHF
Mhm.
because it's a safe haven currency. So basically, if there's stimulus, then the Swiss franc's going to be weak because the US dollar is going to be strong. They usually move opposite of each other. So yesterday they were talking about the new stimulus plan. And when they were talking about it, that's why it shot up like this, because um, if they're talking about the stimulus plan, it's going to benefit the US dollar. So when that happened, it weakened the Swiss franc. I'm not sure if you're familiar with how, price moves. Generally, if price is going down, like how it was this way. So if price is going down, this means that the Swiss franc is gaining in strength. So the reason it was going down is because there was no stimulus talk, all last week. They kept saying they were going to talk about it, but they never did. So that's why people were putting their money in the Swiss franc, because nobody was sure what was going on with the US dollar. But then yesterday, when they started talking about the stimulus plan, that's when price started going up this direction. and the Swiss franc started losing its strength because people thought there was going to be a stimulus that was coming out either tomorrow, yesterday or today. So
Mm-hmm.
that, I mean, that's going to be a little more advanced for you, but the more and more you practice and the more and more you follow news and stuff, you'll start to understand how things are affected. But the main currencies that get affected with stimulus talk is always going to be the US dollar, the Swiss franc, and the Japanese yen, because the yen and the franc are both safe haven currencies. So they're gonna act off any stimulus talk or any Fed news and stuff like that.
Okay.
So I think this is something that we probably should have skipped, but I think we were on such a hot streak the past 2 days that we just took it anyways, and unfortunately this happens.
Yeah.
But yeah, I think that's this is where price currently is now. So I think that was it for odd CHF. I don't know if there's a specific pair you want me to look at where we can go over the same thing. Um, we can look at that if you want. I'm not sure if there's one that you like trading or if there's another strategy you want to look over.
Can we look at Euro USD?
Yeah, sure. All right, look Euro USD right here. All right, cool. You want me to go over the same strategy?
Yeah. Well, just go over the pivot strategy.
Pivot strategy? Okay.
Can you do the pivots? Because I've only been trying to do the pivots on US 30. You can do it on the currency pairs.
Yeah, it works on all the assets as well. So you can use it on currencies, or you can use it on indices. It doesn't really matter, because as long as there's movement in the market and there's a trend, then you can basically apply any of the K2 strategies on there. Sorry, let me go different.
So I know for US 30, use it on the 10-minute time frame. What
Yeah.
time frame would you use it on for the currency pairs?
You can use any of them, because I think on the on the YouTube, I think I have it where it's, let me see if we got it on here. I think I have the video. Yeah, so I have it here where the pivot strategy, you can use it for intraday, scalping, or swing trading. So it's the same exact strategy, but it's just different by the time frame that you're trading on. So obviously, if you're trading on the 1 hour, it's going to be intraday. If you're trading on something higher like the daily, that'd be swing, because you're going to be holding those like that trade for a couple of days. Or if you're trading on 10-minute like we do for indices, that'd be considered scalping, since you're trying to get in and out of the trade within maybe an hour or a couple hours. So for
that's what I'm trying to do. What is the YouTube video called? So I can pull it up real quick.
Yeah, so if you go on the YouTube, it's just you could find it under education. There's like a playlist for it, and then it just has all the videos there. But they're all called K2 Pivot. So if you just go on the page and you just type in, you hit search right here, and you type in K2 Pivots, all the videos would come up right here. So it'll show all the pivot strategies plus the basics of the indicator.
Those your dogs, or your neighbors got dogs?
Those are like the neighbors' dogs. They're from like outside. I think they're by the pool making all that noise. Yeah, my dog's quiet. He's just sleeping right now. All right, let's see. So I'll turn on the pivots right here. So so we'll go over like a couple of entries right here. It looks like there's about like 2 or 3 back to back. So
okay, you're on EU.
Yeah, so this is EU on the 1 hour time frame.
Okay.
So we could probably even start over here, because there was a ton of entries right here if you're trading EU. So basically, yeah, K2.
So would you not have the zones on for EU? I mean, when you're doing the pivot strategy?
Yeah, you don't really need it. I mean, it's good to have just for extra confirmation if you want to, if you want to be really careful. But the thing with this specific strategy, it's not required. But I do recommend that you probably, at least check to make sure. Like, you can just turn it on real quick, and then just see if there's anything there that's or on the 4 hour actually. So it's not super necessary, because this strategy is based mainly off momentum. So if there's momentum in the market, it's probably just going to break right through the support anyways. So that's why it's not super required, and it's not required in the strategy requirements. But if you want to add it on, you can always just add it on if you want, but it's not a strict rule. So let's see, I'll take this off. And then we have them set up on the 4 hours. So this would be an entry right here. Let me see how far is it. And it's a little close. So you might have avoided this entry. So I'll just put the requirements here. Confirm overall trend using the K2 pivots to confirm retracement pullback. Reconfirm rejection off K2 pivots area. And lastly, confirm valid K2 signal. And then after that, you can enter on the open of the following candle. And then lastly, set stop loss at previous swing. So those are the requirements right there. So first you want to identify the overall trend using the K2 pivot. So right here, basically price is below. I mean, I'm sure you're familiar with that, right? When price is below the pivots are all angling in the same direction, and they're kind of spread out like they are right here. That would confirm a downtrend. You know, vice versa. Over here, price is above the pivots are angling upwards and they're spread out. That'd be an uptrend. So right here, we can confirm that this is an overall downtrend, currently where price is. Next, you want to confirm a retracement pullback. So basically right here, price came up and it came down, or actually, so it came down right here, came up, and then it came back down right here. So from this point, it came down and then it retraced back upwards. So that would be the second requirement right there. The third requirement, you want to confirm a rejection off the K2 pivots area. So you can see that price came down, it retraced from this point, and then it rejected off the K2 pivots right here. So the first three requirements have been met. Lastly, you want to confirm a valid K2 signal. So right here, we have a valid sell signal, since it's a sell signal with a red bearish candle. So all four requirements have been met. The next step, you can enter on the open of the falling candle. So right here, you would enter a short position. You'd put your stop loss at the previous swing, which should be up here for about 26 pips. And this is where you can make the decision whether you want to take the trade or not with regard to the K2SR zone. So basically right here, this is where you can make the decision whether you want to risk taking this trade. And then you can see that the bottom zone right here is about 20 pips. So this upper zone over here is only away by like 8 pips. But you can see that price right here, the last time it tested it, it actually cut into the zone, like way down here. So this is where it kind of becomes where your instinct comes in, where it's like, okay, price has actually gone pretty far down here. So the thing is, if price was to come somewhere down here, you can at least, like, if you really want to take this trade, you could, but you can put your, once price reaches a certain area, like maybe down here, you can move your stop loss to like this point over here. So if it does, reject off here, you'll still make some profit there, and you'll be happy with the trade because you wanted to take the trade so bad. Or you can just ignore the zones. Like, the zones aren't required for the strategy, but I mean, it's always good practice to at least know what the zones are, so that if you do want to take this trade, like you won't be surprised when price comes down and then rejects off it, because the thing is, you already knew that was going to happen because you had the zones already marked up on your chart. But the zones are just going to be an extra confirmation. Do you get what I'm saying by that?
Okay.
You get that, right? So the zones are just like, they're not required, but they're just there. Because the thing is, whenever you enter a trade, you want to know exactly what's going on the chart. Like, you want to know where price is likely to reject from. You want to know how far is it from the next zone. You want to know if there's, the more confirmations you have, the more aware you're going to be with how this could play out. Because this will have you thinking whether, what's my risk in this trade? Like, is it going to be a for sure hit, or is it going to be a maybe hit, or is it going to be a maybe stop loss? You kind of want to weigh those in, because it's really going to be up to you whether you want to take the trade or not. Like this would be an entry right here, but it's always going to be up to you whether you want to take that trade or not. So, sorry, let me close my window. It's loud outside. All right, much better. All right, cool. So if you want to take this trade right here, we can let this run and see if it plays out. So you can see right there that it came to this point, but then it broke right through it. So this trade would probably be I don't know, risk percentage wise, I would probably put it at, so if we were entering at this point, I would probably rate it at maybe like a 70% win, 30% loss, because there's a couple different confirmations. Like one confirmation would be that the trend down is pretty strong. So that'd be a confirmation for a plus. A confirmation for a minus would probably be, the zone's kind of close right here, but technically the zone has, prices broke the zone in the past and it's broke it way down here. So if you line this up with this last time that it pushed down, it actually got pretty close to full TP right here. So this would give me, a +1 for an okay, because it'd be a totally different story if we were entering this trade and price was never at, like, it's never gone this far before. Because generally, whenever this happens, history usually repeats itself. Like you can see right here, whenever a price comes down, you can see that it's usually tested around this area right here. So you can see when it tested it right here, it came back and tested that same area. So you can probably, predict that if it was to come down from here, it would probably come to at least this point right here. Let's see. Yeah, it would at least come to like this area right here, or it could come down, even farther down if it's tested this area in the past. So if you were to take this trade over here, you could still lock in some decent profit before it might reject out. So I know it might seem a little complicated, but like, the more and more you apply the strategy, the easier it'll be for you to identify like these little patterns. Like if you get into this point, for me, I would have figured that it would probably push a little farther, because you can see that every time it tested it, it pushed down a little farther. So like it tested it right here and it stopped right there. It tested it again right here a second time, it went farther down. Tested again right here a third time and it pushed even farther. So, if it's testing it a fourth time, odds are it's probably going to break right through it.
Break through.
Exactly, because the resistance and support can only get tested so many times before it makes that full push. Because the thing is, like price action traders, everyone's watching the same exact zone right here. So the thing is, when price gets near that zone, like right here, everyone's waiting for the same thing. Like, so all these price action traders are like, oh, it's testing it a fourth time, we got to break right through here. So then a bunch of sellers join the market and they push like right through it like that.
And push through it.
Exactly. So if you just look at the charts, like you can see right here, this is like another example right here. It tested it 1, 2, 3 times. The fourth time it tested, it shot right through it. And then again, right here, you can see it tested it 1, 2, 3, 4 times. The fifth time right here, shot right through it. So you kind of have to put yourself, I know I'm getting like, this is getting a little more advanced, but the more and more you practice, you're going to start to identify these things right here. You can start to count how many times it's tested it. And then you kind of got to put yourself in, the shoes of other traders. You got to think what other people are thinking. Once price reaches this area, it's tested it already 1, 2, 3, 4 times. This fifth time, what do you think is going to happen? You think it's going to reject off it, or you think it's going to shoot right through it? And that's how you could, weigh your risk, whether you want to take a trade or not.
Okay.
Yeah. I mean, it's a little complicated, but the more and more you you practice it and you see it with your own eyes, the easier it'll be for you to identify it. Like right here, you can see that this area has been tested a lot, like way more in the past. I tested it 1, 2, 3, 4, 5, 6, 7, 8, 9. This is probably the 10th time it was testing it. So, on the 10th try, it's probably gonna break right through it. But yeah, so back to the strategy, that would be the first entry right there. And then again right here, there's actually another entry. So if we go back to this candle right here and we just disregard the zone right here, because like I mentioned, the zones aren't required for this specific strategy. So you don't have to incorporate it in your requirements. But if you just go by the normal requirements right here, same thing. First, we confirm the overall trend. It's still trending down right here since price is below the pivots. The pivots are angling down and they're spread out. So this is a downtrend. We confirm a retracement pullback because price came up, then it came down and retraced from this point right here. So this fulfills the second requirement. Then price rejected from this point right here. This is going to be the third requirement. And then the fourth requirement, confirm a valid K2 signal. Right here, we have a sell signal with a red bearish candle. So all requirements have been met. We do the same thing again, enter on the open of the following candle. Our stop loss is going to get placed at the previous swing, which would be right here. And then we let that run. And obviously you hit full TP. So if you took both of these entries or you just took one, both of them would have hit full TP. So that'd be 2 entries right there. Let's see if there's another one that comes along over here. All right, again, right here. So right here, we have another sell entry. Same requirements, confirm the overall trend. Price is below the pivots. They're spread out. They're angling down. It's a downtrend. Confirm retracement. Price comes down, retraces from this point upwards. Then it rejects from the K2 pivots right here. So the first 3 requirements have been met. The last requirement, confirm the valid K2 signal. Right here, we have a valid sell signal. So once those are met, you enter another short position right here. And this is what I mean about having TradingView like plot it for you, because the thing is, if your stop loss is right here, it's way too close. It's only 12 pips, right? The spread for this is probably going to be 3 to 5 pips, maybe more, depending on your broker. So that's why I just let TradingView do it for me. So right here, this is where they determine the swing to be, and then if you let it run, it would have hit stop loss. But so that's why you have to take every trade, because like right here, if you won these 2 right here, you'd be in profit maybe 48 pips. So right here, you'd lose 28 pips, but you'd still be in profit overall.
Okay.
Let's see if there was a zone there. Maybe there was a zone there that's actually where it, what caused it to reject. So that's what I mean by having, the extra confirmation from all of the, so there's actually no zone down there. Let me look on the higher time frame. See if there's anything there. Actually, this was on the 15th. I think there was maybe news during that time, because it looks like there was news right here, but I mean, it happens.
Yeah, I'm ready for all this news to be over.
I know, right? The elections. I think the elections are in 2 weeks, right? I think on November 3rd or something like that.
Yeah.
But yeah, I mean,
It's getting real close.
yeah, I can't wait for that to be done, because I feel like every time Trump tweets, like the US 30 trade today, I didn't even see that coming.
Not
It dropped like
it was
crazy.
on its way to TP.
Exactly. One of the guys actually, he messaged me. He said he forgot to put a stop loss. He ended up hitting a TP because he entered late after it dropped a little bit. And then he forgot to put a stop loss. So he just let it run, and then sooner or later he just ended up hitting full TP for his trade. And I was like, dang, that's crazy. He got super lucky.
It came back up, right?
Yeah,
because it just keeps dropping.
Exactly. Yeah, I think for US 30, yeah, because it was coming down right here, and then we had this crazy spike right here. This spike shot up, geez, 1,000 pips in 5 minutes.
Crazy.
Yeah, I mean, the market's unpredictable. You can't really predict that something like that's going to happen. Even for this right here, I don't know what will cause this to spike up. Let's see. Okay, because there was news coming up right here at 2 a.m. So it looks like it started to swing up right here. And then once that news actually hit, it ended up spiking it way up, right there. That makes sense. So technically this trade right here, we wouldn't have taken it because there was news that was too close. So we probably would have skipped it, because generally if news is coming up within 4 hours, I just avoid the trade, because something like this will happen where it's coming down pretty heavy. And then there's news right here, ends up spiking all the way up. So for these right here, these are medium news, so these were fine. Or there was actually no news from this period to this period over here. So these would have been okay, but over here, these were high impact news because they're red. So that's why we probably would have just skipped this trade right here. I think news is probably going to be more important than the zone in most cases, because generally the zones, they'll bounce off it, but odds are they can still break right through it like they did right here. even though these zones are too close. But let's see. So we keep moving forward right here. I'll see if there's any other entries. So this right here, this was on the 18th. I think this was on Friday, I think. Yeah. So this was like around Friday. So we wouldn't have taken this trade either because, you know, obviously I don't trade on Fridays most of the time unless it's just US 30. But you should be more careful once it gets like towards the end of the week. So like Thursday night, that's generally where I stop trading Forex because things like this could happen like right at market close or market just like price just spikes up for no reason. So that's another thing to keep in mind. Generally for Forex, I stop trading it on Thursday night.
Okay.
Because on Friday, it's just the market's unpredictable because there's a lot of people that are either trying to get out of the market for the weekend or a lot of people that are trying to buy at a discount. So if a lot of people are selling off, people end up buying a bunch or they end up selling a bunch. And then it causes some crazy movement like this before market close. So there's actually a lot of factors that you need to kind of factor in when you're determining if you want to take a trade or not. But I mean, it all comes with time. I don't know how long you've been trading for, but you know, obviously I've been trading for like 10 years. So these things kind of just pop into my mind whenever I'm looking for a trade.
Yeah, it's only been a couple months.
Oh yeah, so you're brand new. I mean, you're paying the price to learn. You know, like for me, I lost a lot of money when I first started, but then you know it all paid off eventually. So my recommendation is just never give up. A lot of people give up on trading like way too early, and then you know it's crazy the possibilities that they could have reached if they just kept going.
Yeah.
Yeah, but let's check out US your USD right here. So here's another entry over here. I'll show you some in the opposite direction. So we were looking at sells over here. Here's the same thing, but for buys. So like right here, we confirm the overall trend. Prices above the pivots, they're angling upwards and they're spread out. So this is going to be an uptrend. We have a retracement right here because price comes up, then it retraces downwards. Then we have the rejection right here off the K2 pivots area. The requirements have been met. And the last one here, we have a valid K2 signal. So since all those requirements have been met, we can enter a long position right here. And then could let that run. And there you go, hit full TP right there. So that hit full TP. And then again, right here, there's actually another entry because we have a buy signal right there. So same thing, uptrend, price comes up from here, retracement from this point comes down, rejection right here, buy signal, enter a long position. And then obviously right there, I hit full TP. It's like the same pattern that happened over here, actually. I don't know if you noticed that. There was two sell signals that we saw right here. And it did the same exact pattern, but in the opposite direction.
Mm-hmm.
Because we have these two sells right here, and we got the two buys right here. And then same thing again right here. There's another entry. It's still in an overall uptrend.
Right. The last pivot entry at, was it 3 o'clock today?
Mm-hmm.
Sheesh.
Was it this one right here on for your USD?
Yeah.
Let's see. So let me enter that long position right there. Let that run. Oh yeah, so I think that was the one you were talking about, but it looks like it's still active right now.
Yeah.
Yeah, so it's technically still active right now. I might have moved my stop loss like in profit at some point because like I mentioned, you should probably at least mark it up so that you can be aware of like when price reaches a certain area. But if price reached right here, I might have moved my stop loss or I might have just exited the trade because it tested it like 1, 2, 3, 4, 5 times. So that's about within 5 hours, it just kept testing that same area. So if it kept pushing up past it, I probably would have just moved my stop loss right there, and then I probably would have gotten out. But if we get another buy signal, which is probably going to come soon because last signal was a sell signal. If we get a buy signal here, it would just provide for another entry. So that's why I don't really mind if I get stopped out in profit, because generally there'll probably be another entry. Like with this one right here, I might have gone stopped out, and then there's another entry right there. So you have like 2 opportunities to get into the trade. Or if you end up holding on to it, if you have like a second buy entry like we did right here, that would just give you extra confirmation that, price is probably going to continue upwards.
So currently where price is right now, um, it rejected off of the pivots at like 2 o'clock, and it looks like it's going back up. So if there's a buy signal, that would be the right time to get in the trade. And then with the pivots, we still wait to the second candle, right? We wait for the signal to close, right?
Yeah, exactly. So you want to wait for it to close so you have confirmation that the momentum is actually going upwards. Because the thing is, if you enter the trade before it closes, the signal could still disappear before that candle closes. So the thing is, you just want to be really patient with it. And I know that's probably an issue with you because it's been an issue with me for a long time, just being patient and waiting for the candle to close. But when I am waiting for it, I usually just look at this timer right here. I don't know if you notice this timer on the right side.
Yeah, it was one of the first things I found out about.
Yeah,
So the
like
time.
exactly. For me, it's like if I'm waiting for a signal to close, I'll probably just mark it up. Like I'll put a highlighter right there, and I'll just flag it so I know what to look for. But since you're trading on the 1 hour, I would just wait for this to get closer, like maybe like 2 minutes, and I would just wait for it to count down. And then if it closes and it's a buy signal, then I'll just be ready to enter that buy right away. Or you can set an alert too. I mean, there's a lot of different ways to do it. This is why I don't really like trading on the 1 hour, because you have to like literally be on the chart like all the time, because a candle closes every hour. With the 4 hour, there's only specific times where you look at the chart. Like, I only look at the chart at 6 a.m., 10 a.m., and then again maybe at 3 p.m. sometimes if I want to enter a late entry after the swap spread. But today the market was just off, so that's why I didn't look for any trades at 3. But generally, if the market's normal, I'll look at the chart at 6 a.m., 10 a.m., 3 p.m., and then again at 6 p.m. and 10 p.m. And that's whenever I send out signals, because I don't want to be on the chart like literally all day, because you start to like, if you're looking at the chart all day and you don't have a trade going, you're going to try to force something. And that's something that I learned over the years, that it's not worth it. Because the thing is, if you force a trade and it's not 100%, that trade could go south real quick.
True.
Yeah.
End up losing money.
Yeah. So I think the 4 hours is the best time frame if you just want to be accurate, because I feel like the zones are perfect on the 4 hour, plus the entries are too. So like this was the 1 hour chart using the pivots, and let's see if there's any entries on the 4 hour. I think there's probably more entries that are cleaner on the 4 hour versus on the 1 hour. So like if we're looking at the yeah, actually it looks like the entries here are actually a little better. Like even right here, there'd be an entry here for a pivot in our long position. And if we enter that, looks like, well, the stop loss looks a little wide. Let's just go back over here. So if you're on the 1 hour, then on the 4 hour, I would use I would actually put at the swing, because generally if it's too far out, it's usually like a big move, because the 4 hour, it obviously moves a lot wider than the 1 hour, because it's like 4 1 hour candles put together. But yeah, if you took that trade, it looks like it might have hit full TP, might have not, depending on the spread. And then again, right here, there was another entry as well. But yeah, I mean, it just depends. If patience is probably your problem, then you should probably just maybe just scalp, because I don't think the 4 hour is going to get any better. If you can't wait for the 1 hour, the 4 hour is probably going to test your patience even more.
Definitely.
Yeah. But I think over time, because you're still a new trader, so like I was the same way. When I first started trading, I only scalped because I couldn't wait and I was never patient. But over time, you start to realize that, staring at the chart all day is not good for your health, and you're probably gonna start hating it. But like I mentioned before, it all comes with time. So I think if waiting is your problem, maybe go on the 30-minute. That might be even better.
We can do
So yeah,
the
looking
30-minute.
yeah, because before I moved to I never went to the 1 hour. I went from the 30-minute and then I jumped to the 4 hour because I figured the 30-minute has a lot of entries. Like right here, if you're applying the pivot strategy, there's a whole bunch of entries right here. There's one right here that goes to full TP. There's another one right here that goes to full TP. There was one right here, but it hit stop loss, it looked like. So these two would have been wins for about 40 pips, and then you lose one right here for 20 pips, but you'd still be in profit 20 pips. And then again, right here, there's another entry. So there's another win for 20 pips. And then again, right here, there's another entry, again for 20 pips. So you would have had 4 wins and 1 loss right there if you took all those trades. And then again, right here, I think this is when there was news. So we probably would have skipped that one right there. And then again, right here, actually, there's one. So I think that's another win right there. Yeah, so that's another win for like 20 pips. And then there's another one right here. So that's about 7 wins and 1 loss right there. It's not too bad. And again, right here, looks like this might have been a loss. But yeah, I mean, you get the gist of it. I think you would just have to find your obviously, if you're trading on the shorter time frame, you're going to have more entries for like smaller moves. But if you're trading on the higher time frame, you're going to have, less moves, but like bigger moves, so you don't have to take so many trades. But I think it's just really going to depend on you. You have to figure out what's like your favorite time frame, and then just stick to it. It doesn't really have to mean that it's the most profitable for you, because the thing is, once you figure out what you like doing, then you can make adjustments from that point. So I'm not sure. Do you like 1 hour, or do you think you think that's still too long for you to be waiting?
Yeah, I want to try the 30-minute.
Yeah, because I think 30
Because
minutes.
what I want to do is like, because I work, so I've been getting up during London session, and I want to try to get what I can done in London session, and then go to work, and then maybe just do whatever you call, during Asia session. But trying to trade while I'm at work sometimes, especially now that they're opening everything back up, it's getting a little harder. So I've
Oh
been trying
yeah,
to get things done from from like 2 to 6.
yeah, definitely. I think you should probably just start trying to get used to the 4 hour chart. So I think if you're on the 4 hour chart, that gives you a, let's see. So you'd be up from, you said from like 2 to 6, right?
Hmm.
So if you were doing that, actually that'd be perfect because the 4 hour candle closes at 2. Or actually, where are you located? You're on the East Coast, right?
Hmm.
Okay, so you're I'm trying to figure out what the time difference is there. So it's
Shawn, I'm
2.
gonna join from my phone real quick because I gotta go get in my car and pick my daughter up.
All right, yeah, no problem.
I gotta go get some.
ACI, can you hear me?
Hello?
Oh, I can hear you now.
Hey, okay, there we go.
Yeah, I just heard the fan blowing this whole time. I thought you just left it on.
Oh yeah, I left my computer on too.
Okay, that makes sense. Yeah, I was like, I thought you like got up and then you were coming back, but it's just your fan that's run the whole time.
Sorry.
No, that's no problem. But yeah, going back to figuring out what time frame we like to trade on. I think you got to figure out like what you like to trade on first, and then we could probably dive deeper into that because there's a lot of different things that you can do depending on the time frame that you're trading on. Like if you're trading on the shorter time frame, then
Uh-huh.
the zones will be important because price generally spikes around a lot. So if you're trading on anything lower than the 4 hour, then for sure the zones will be like an important part, just so that you don't get caught in like any of those, random spikes in price or random like rejections and stuff like that.
Mhm.
So I think,
Okay.
yeah, I think you just gotta play around with it, see what you like to trade on best. I think the 30 minutes is pretty solid if you're trading, within a short time frame. But also, I think you should probably look at the 4 hour too, because if you're trading on the 4 hour, then you'll have like maybe two trade opportunities, but between that little window in the morning that you said from like 2 to 6, where you can just look at all the pairs on the watch list and see if there's any entries within any of those pairs, which I think you'll find because um, all of the entries that I give using the K2SR strategy for the signals, those are all done on the 4 hour. So you can see that we still lock in pretty decent amount of profit, trading on the 4 hour. So that might be something
Yeah,
that you want to
definitely.
look. Yeah, because that might be better. Because if you can do that, you can just like set and forget a trade. Like you can take the trade at 2 or at 6, before you go to work, and then you can just let it run throughout the day, and it kind of works out perfectly for you because price ends up moving a lot quicker during the New York session. So basically, you're pretty much setting up that trade during London, but then once the U.S. session opens, once you go to work, then it could like shoot straight to TP, like how it's been doing for us, lately.
Mhm.
Yeah. So
Okay.
yes. So I think if you're going to be applying the K2SR, the SR zone strategy, then I think you should just focus on the 4 hour and just look for entries during that little window that you have before work, and then you can just set and forget it since it's on the the 4 hour time frame.
Okay. So I will do that tomorrow morning. I will look at the 4 hours.
Yeah, I think that would be better because the problem with the 30 minute is I used to do that too, and I was still working my job as an attorney. And the problem with that is you have to really be on the chart. Like it's not something where you can just set it and then forget it, because price spikes around so much on the 30-minute where it might not be profitable for you unless you're able to adjust your stop loss um, whenever you can.
Okay.
Yeah.
Sorry. Alrighty. Well, I'll let you know how that goes.
Yeah, definitely. Yeah, and then once you
As
start
always.
practicing it, once you start getting it down, you can we can have another session. We can we can figure out what if there's any changes that you need to do to make it better. But I think you should be pretty much fine if you apply the zone strategy on the 4 hour, because that's basically the same thing I'm doing for all the signals.
Okay.
Yeah. All right, Sarah. So I'm gonna get on my next call right now. But if you ever want to set up another session, just feel free to let me know, and then we can schedule another one.
Alrighty, I will. Thank you, Shawn.
All right, perfect. No problem. I'll send you the link for this if you want to go ahead and watch this later on.
Yeah.
All right, perfect. I'll talk to you later.